What's going, guys? Hope you're having an absolutely fantastic day. So in this video, we're going to be talking about why Meta stock is absolutely crashing after earnings today, right? So you can see that the stock is down 13%, and if you're a Meta shareholder, you're probably not having that fantastic of a day, right? But actually, there is some good news in the earnings report, and we can have a look, right? So we can see that all the metrics they track are actually very, very good, right? So daily active people, 3.24 billion, up 7% year over year. Ad impressions up 20% year over year. But you can see that the average price per ad, right, is only up 6% year over year when their impressions are up 20% year over year. So that can be two things. Either Meta is producing more value for their customers, or the second thing, which I think is more likely, is that the ads are not fetching the prices that they used to, right? So they can't push maybe so much price increases onto the ads anymore, right? Because there's so much competition nowadays, namely YouTube, Amazon, Google, all these companies, right? So Amazon is a new entrant and YouTube is also a fairly new entrant because YouTube ads really weren't as targeted and as well, maybe their algorithm wasn't as well trained as Meta's, right? But now you can see that YouTube, actually their ads are quite spot on, right? Then things like TikTok and all of this, right? So that's my speculation that maybe the pricing power is not as strong, right? But definitely the moat around this company is still huge, right? So you can see that the revenue went up 27% year over year. And that's actually a huge number, right? For a company this size. You can see that costs and expenses were up 6% year over year. So 27% increase in revenue and 6% increase in expenses is like 27 minus 6, right? So it's like 21% straight to your gross profits. So you can see capex went up to 6.72 billion, and then the share repurchase programs and all of that. So I want to talk about the valuation, right? So why did Meta stocks just plunge like this, right? My speculation is that it's not valuation related, but this, right? I think this is the worrying part, right? So they talk about the full year capex, and they expect it to be up 2 billion from 94 to 99 billion to 96 to 99 billion, right? And to me, that's not a like huge number, right? Because it's 2 billion, right, at the end of the day, and Meta's free cash flow a year is like 40 odd billion, right? So it's not that big, right? It's like 5%. But I think the place that really spooked people, right, is the Reality Labs losses, right, which was the reason that the shares even went down to $99, right? So they're bringing it up again, right? After investors have pushed up their stock, they are no longer so scared to mention it again, right? For Reality Labs, we expect to continue operating losses to increase meaningfully year over year due to our ongoing product developments and also our investment to further scale the ecosystem, right? And another thing that they are really investing in is AI, right? And I can't blame them at all, right? Because if you don't invest in AI, all the other companies are going to invest in AI and you're going to fall behind, right? Just because you're a public company and your investors don't like it, right? So I think that's what's really worrying investors, and that's what caused the crash, right? Because if you talk about price to perfection, I don't really think Meta stock is priced to perfection, even though it's up like 400% in what I think this is like almost 2.5 years now. So end of 2022 until 2024. Actually, is 1.5 years, right? So even though Meta stock was up 440% before this drop, in like 1.5 years, I don't think it was necessarily priced to perfection, right? So if you take a look at the forward earnings, right, it's really not that high, right? It's about 25 for a company of this quality. And you take a look at their return on invested capital, it's 33%, right? So actually, this is the number that really matters in the super long term, right? If they can maintain it at 33%, right, it doesn't matter what their PE is, right? If it's in the 20s or something like that, it's actually considered really cheap. But now the main question is, can they maintain it at 33%? And I think no one has articulated, like no YouTube videos or research that I have watched, right, articulates this as best as Daniel Pronk over here. He was talking about how probably this is the peak of the free cash flow cycle, right? And I agreed with this before I even watched this, right? Actually, I had this thought already, right? It's not that people think that, you know, the stock is necessarily expensive, so they're selling it, right? That can be a part of it as well, because if you're up 440% in 1.5 years, maybe you want to take some profits, right? Maybe cut half your position or something like that, right? But let's take a listen to Daniel and then we'll continue discussing.
about as efficient as Meta is going to get, and their margin expansion probably isn't going to be too significant moving forward, at least in my own opinion. So overall, that means that we should not be expecting massive free cash flow growth over the next couple of years here, because their year of efficiency worked and it looks like it is pretty much over. Honestly, this was a pretty good quarter.
So yeah, I totally agree with him, right? Because they already cut all the fat out, and now it's a pretty lean mean machine, right? Meta the company is, right? And I think they did overcut, because if you go on Instagram and you use their products, right? WhatsApp, I've been noticing there has been a few bugs ever since they did that massive job cut like about one year ago. And also Instagram, right? There is still ongoing bugs. It's like the video and the voice of the video doesn't match up. The play bar doesn't match up. Minor things like that, right? It doesn't render the product unusable, but it definitely lowers the product quality and product experience, right? So what I think is happening, and I would even put up my own price target after this, right? Not really a price target, more like a multiple that I'm willing to buy Meta at, right? So what I think is happening is people are scared of the increased investment again, and will it cause another down cycle like this? I am very unsure, and I think it's even unlikely, right? Unless we have a big recession or something like that, and everything just goes down a lot, right? But what I think is that Meta's free cash flow, right, is not as low as it looks, right? Because you can see that in the video as well. I couldn't find it anywhere else, so I'm going to use the video as an example. You can see that they doubled the free cash flow year over year, right? And how can you double free cash flow so fast, right? Because their business is not actually growing that much, right? Even though it did grow 27%, but it was from a very low point. They were negative growth, and then they are growing 27% on top of that, right? So how can you do that? Is by reducing expenses, right? And now that you've reduced all the expenses, what is next, right? You have to continue to grow your business, right? If not, basically the earnings are gonna stagnate again. So I think there is a higher chance of the cash flows being lower or even stagnant than going up, right? So I would say there's an 80% chance that in the next few years, the cash flow won't be growing as fast as this, right? Maybe it might even go negative. And I think Meta has become so big that it's actually a cyclical stock now, right? Even though it's a very, very good product and everything. Because the ad spend, right? Think about ad spend right now. If the whole economy, right? Let's talk about macroeconomics. If the whole economy doesn't do well, what will happen to ad spend? Everyone will cut ad spend because there's not enough demand. Just look at something like Tesla. They just cut all their marketing team and all of that because they say, oh, this marketing team is not effective. Things like that will start to happen. And a second thing is, can Meta's performance today potentially be attributed to already a slowing economy, right? Because we know that even though the government numbers keep saying GDP is going up, things like that, but we know that on the ground, right, a lot of people, when they are talking, podcasts that I watch, all of that, they're all saying everyone's struggling. Nobody is being able to like afford to buy houses, things like that, right? So I think another potential is that actually the better than expected results is coming from people trying to generate demand through these ads, right? So it might not be purely due to Meta being a fantastic company, right? Maybe everybody has a supply surplus and they have a demand deficit, so they advertise more to get more people through the door, right? So potentially that is what's happening, right? That free cash flow is peaking, and then we'll go through a cyclical downturn, and then we'll continue growing, right? So I think for me, I would wait until they are, let's say, somewhere back around here, something like 5 billion, 6 billion a quarter in cash flow, if they ever get back there, if I'm fortunate enough. But their earnings potential through the cycles, right, will probably be an average of this 10 billion and this 5 billion, right? So in the end, their average might be something like 8 billion or 7.5 billion a quarter in the long run. So if you value it based on 7.5 billion a quarter in the long run, right? So it's about 30 billion, and 30 billion, if you want to get a 20 times earnings, is about 600 billion market cap, which today, even after the drop, is still 1.1 trillion, right? So you can see that how my brain is functioning right now. So you don't want to buy all these stocks when their margins are peaking, they are at a cyclical peak, right? That's why a lot of the auto companies and a lot of the car dealerships and all these things, or the mortgage brokers, look very, very cheap when they are at the peak of a cycle, right? Because their earnings are like 3 times. Then you're like, oh, all I have to do is 3 years, right? But what all the sophisticated investors realize is by the time the second year comes around, you've made your 30% in 1 year, and the second year comes around, actually they are not even earning money anymore. They're making losses, right? So next, I want to talk about Evolution. So what happened with Evolution? They posted better than expected earnings results, and the stock was down like 5% in a day, right? So ignore this peak because it was a run up before the earnings call. And what I think is when I start to see price action like this, right, it reminds me of like 2022, where a lot of companies were publishing results and their stock would be down 30%, right? Think Snapchat, Netflix, even Meta was another company that happened, right? So I think we are still in a frothy phase of the market. And then another thing that is very particular is actually Tesla, right? Their earnings were not good, but basically the Elon Musk came out like a cheerleader and said, oh, we're gonna do this, and investors bid up the stock, right? So actually, if you compare Meta and Tesla, right, which one of the companies are cheaper? I think Meta is still much, much cheaper than Tesla, right? So I really don't understand this move, right? That something that is cheaper will go down and something that is still currently very expensive, right? Because I think Tesla is still trading at like 50 something times forward price earnings, and their return on invested capital is not that high because they are a manufacturing business, right? Compared to Meta stocks, 33% return on invested capital. So I think this is a very, very weird time in the market, right? Where you can beat earnings and your stock is down, and you can miss on earnings, but you give a favorable outlook and your stock is going higher. So very weird time in the market. So in my personal opinion, right, even at the current prices, right, Meta will beat the market in the long run, right? Because of this high return on invested capital, right? But if you want to try to time the shares a bit, or like reduce risk a bit, right? I think the purpose of me trying to time it is to reduce risk, right? Because I don't want to buy something at the top of the cycle, and then when it goes down, I can buy actually at half the price, right? Now, I'm not saying Meta will get half, right? But then I think it's a realistic possibility. I can see how it gets there, right? As I described just now already. So I'm not saying that it's impossible, and I'm also not saying that it's very likely. So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead, and peace out.